Hi friends, Simit here from informedtrades.com. In this video, I want to take a look at a Euro day trading strategy that comes from bkforex.com. Boris Schlossberg and Kathy Lean, two Forex traders I've known for a while. You may have seen them on CNBC. We'll look at a part of their strategy for day trading the Euro here. Okay, the key elements of the strategy. One, it's a mean reversion strategy. So another way of saying it's a range-bound strategy. It's not really for following trends. It's designed for intraday trading of a pair that's really liquid, like the Euro, extremely actively traded. For instance, this is a 15, or it would work on a 15-minute time frame, or it's sort of designed with that in mind. You could vary the time frame, but that's the general idea of it being a shorter time frame is the idea with the strategy. It involves pairing plotting two pairs of Bollinger Bands, using different standard deviations. You want to look for low ADX. ADX is an indicator that tells you if the market's trending or not. If it's low, that's a sign that it's not trending, which is sort of one of the prerequisites for the strategy. I'll go over some of the basic concepts. You can get the full strategy with all the details, the exits, the exact specifications of the indicators over at bkforex.com/Euro. Okay, so easiest to illustrate the strategy with an example. Here we have two pairs of Bollinger Bands. So here's one pair here, and here's another pair here. You can see, or basically, the only thing that differentiates them is they're set at different standard deviations. Bollinger Bands is sort of measuring an idea of when a market is at an extreme top or when it's at an extreme bottom, due for a rebound. Bollinger Bands work well in a range-bound market, which this strategy is designed for. So basically, you want to look for when the market closes at or above the higher standard deviation. Okay, so here in this instance, this candle right here, we break through the lower standard upper deviation, and we go to the higher one and we close there. Here we didn't quite. We just touched the lower high of the standard deviation. Here we go to the higher one. We touch the high and close there. In this instance, we touched the high, but we didn't close there. So this is, even though the trade actually would have worked out, this is not really the signal that this strategy is giving. So this strategy would have stayed out of this one. But here, over here, we go to the higher one, we touch it, and we close there. Now you wait for the market to break down below the second, the narrower Bollinger Bands. So here, we close at the higher one, market goes range bound for a little bit. That's another good sign. We see that there's something resembling distribution forming. And then right on this candle, we close below the high of the narrower Bollinger Bands. Now that's our signal. So we would enter here. Now in terms of exit, there's one other criteria. Before we exit, we want to make sure ADX, which is this indicator down here, is low. So, here we see ADX is pretty low. It starts to rise once we get that move going. But a low ADX tells us or confirms that, yes, the market is range-bound. Now, in terms of exiting, Boris and Kathy have their own strategy for this. You could exit when we start to see touching the lower Bollinger Bands. You could exit on a spike of an ADX. You could exit, based on where your stop is, targeting risk reward, all sorts of ways to exit. But that's sort of the basic idea, combining two pairs of Bollinger Bands with ADX to find when the market is really due for a pullback in a range-bound market. That's about it. If you have any questions, you can join us at informedtrades.com. To get the full strategy, go to bkforex.com/Euro. Thanks and best of luck in your trading.